Hey Bulls and Bears, it is December 29th, 2022. We are here at the last trading day, the last market day of 2022. And we got a lot of news to get caught up on today, a lot of economic financial news, and what's going on with your money and my money. I want to start here out of this article, The Organic Prepper. And this article outlines things very well, very clearly, that Americans spent more on Christmas, not because they have a lot more money saved, but because they took on more debt and everything cost more. So it's another example of how a negative is being turned into a positive, right? So when you saw the news about this holiday spending, oh, it was great. The markets went up because of the news. Look at all the holiday spending. Look at all the credit cards that people swiped. And that was chalked up as great. Everybody's doing well because they're spending more. Well, not exactly. And this lays it out pretty well. And we've outlined this here on this channel and other examples of how negative information is spun into being looked at as a positive information as far as the markets go. So I think most of the population looks at these things and they think to themselves, wow, everything must be fine. I must be the only one in debt. I must be the only one having problems paying my bills. And I think a lot of people get a false perception of how bad the economy really is when they read these news headlines. And that article also points out the fact that in the third quarter of 2022, debt increased at the fastest pace that we've seen since 2008. 2008, the year of the financial crisis. This is what we see right before the crisis hits. And I think the crisis is already here. The problem that I think is it's just being covered up so well with the way the news is being reported. Normally, record levels of debt, record credit card spending is looked at as bad news, but it's been spun into good news. So yes, the crisis is here. I think 99.9% of the people have no idea because they don't look that deeply into the news. They'll look at the headline and they'll think to themselves, okay, everything's fine because the headline says this. Well, look at the numbers behind the headlines and you see things are not always what they seem. But I think most of us here have been onto this for quite a while. So then you say, yeah, JJ, we know, we've been hearing this. How does this help us? How does this give us any advantage? Well, look at the situation right now. I bet that most people watching this channel right now didn't buy a home this year and are not one of the 500,000 people in the United States right now that are already underwater on their mortgage. So there you go. I'm sure that a lot of you likely by choice didn't buy a home this year. Not that it's a bad time. It can be a good time depending on where you're located. But in most major metropolitan areas, not a good time in 2022 to buy a home with mortgage rates doubling, with everything else stacking on top of everything else, the record levels of debt, and the pool of buyers drying up for homes. So when we look at this, it's not always about what you're doing or what you're investing in. A lot of times it's about what you're not doing. You're not going out and buying something that's going to drop in price a few months later. And, I'm not criticizing anyone that did go out and buy. Maybe they're in a very strong financial position and they won't be hurt if their equity drops by 50, 100,000, 150,000. Who knows what it's going to drop to. But we do know that we've likely seen the peak in home prices for many, many years. Now let's take a quick look at how the markets ended today, and not just today, how they ended the year, because this is the last year of trading. We see all major indexes in the green, which can be looked at as a positive sign. But let's take 2022 as a whole. This was the worst year for the stock market since, guess what? Since the financial crisis. So we're going back again to 2008, which is, wow, 14 years ago now. So think about that, 14 years. What a bull run we've had. Unprecedented numbers of consecutive years with interest rates at rock bottom. And it's to a point now where even if the Fed did reverse course and drop rates again to rock bottom, it's going to be too little too late because the consumer is already loaded up on debt. Even people that are going to get a break or would get a break if rates were lower are not going to be able to come up with that down payment to buy a home. So of course, what do you have? Then you have cash buyers, the already wealthy coming in buying more homes. And I think we're going to see that really increase in 2023. And even investors that come in now and buy homes are still in a strong position, even if the home value drops. Why? Because they can just simply raise the rent. They can simply raise the rent. And there's such a shortage right now of rental homes, rental housing, that even buyers today, cash buyers or people going in to buy an investment home, are still going to be in a very strong position, but not for long, because pretty soon the average renter will not be able to pay their rent. So that's another thing we're going to see in 2023. We're going to see that surge big time. We're going to see a major surge or increase in late rents. And it's going to vary by city, because some cities, some states still have protections in place. But as these protections expire across the country in different cities, different states, you're going to see pockets of major surges in evictions, unfortunately. And where that's allowed to happen, where landlords are allowed to remove the tenants that don't pay, that's when you're going to start seeing rents correct to the downside. In cities and states where those protections stay in place, rents are likely going to stay high and go higher. So the problem that they're trying to fix, which is rents are too high and people can't afford it, is actually being worsened by these programs that are designed to prevent evictions. You see how this works? Right? So when you have this intervention in the markets by people that really don't know how markets work, a lot of the lawmakers, it usually tends to make things worse and not get better. Now, also, when we look back at 2022, it's the year of several bubbles popping, a lot of mega bubbles. We have the housing market bubble popping. We have the automobile price bubble popping, the stock market bubble popping, even though it hasn't crashed. Same with home prices. They haven't really crashed, but the bubble certainly has popped. And I think we've seen highs in all of those markets. The crypto bubble, I mean, you could call that a crash. I mean, if there's anything out there that you can call a crash, the crypto crash is definitely a crash. I mean, look at Bitcoin just by itself, almost 70,000, now down to the $16,000, $17,000 range. Cryptos definitely meet the definition of a crash, in my opinion. And there's people out there buying what they think is the dip in a lot of these markets, including cryptos. And there's other people out there saying this is a crypto apocalypse, that crypto is dead. Look at Peter Schiff, what he said recently. He came out and said, this is a crypto extinction, unquote. So not just a drop, not just the bursting of the bubble for it to reinflate again down the road, a crypto extinction, meaning no more cryptos, that they're going to be completely devalued and no one will want them. Do I think he's right? Well, I don't know. But I know that I'm still going to hold some, and I'm at these prices. You know, I did load up again on some of these cryptos. And to me, it's kind of like a lottery ticket. If you buy it and you don't win, then you don't win. You don't put your life savings into it. You only invest what you can afford to lose. And I think they're probably not dead. I think they're going to continue to go up at some point in the future. I think we're going to have a lot of whales, a lot of big companies coming in, pushing the price back up. And we also see what happens with crypto money, that it tends to get used in ways that people do not want to be tracked, for lack of a better word. Look at what happened with FTX. There's a lot of shady stuff going on, what they were involved in. So if you look at it from that point of view, if there's a lot of illegal activity connected to crypto, they could come in very heavy-handed with regulation and put a lot of these crypto exchanges out of business. So you always have to keep in mind the lawmakers are the wild card that could come in and really change the markets. Just like we go back into the housing market and rental homes, the cost of rentals, if they change all these laws where people have protections where they can't get kicked out of their homes, they can't be foreclosed, then obviously that's going to have a major impact on the price, right? So we always have to look at the invisible hand of manipulation. It's not just about looking at fundamentals or supply versus demand and interest rates, right? There's always the wild card of the invisible hand in the laws. Now, still on the topic of cryptos, let's talk about FTX again. But this is your bank. What they did at FTX is they took funds and they invested them elsewhere, meaning they no longer have the funds. What are your banks doing? The banks are doing the same thing. We're talking about your too big to fail banks, Wells Fargo, Bank of America, you name it. The money is not there. They're loaning out your money instead of investing it. Well, they're investing it too, but they're also loaning it out at many, many multiples of the amount of money they have in reserves. Now, nobody is really scared about that because they think that FDIC is going to be there to fully insure their deposits, right? So it goes back to what's allowed and what's not allowed. Banks are allowed to go out and loan out your money and no longer have your money to pay you back. And if everyone tried to get their money out of the bank at the same time, the banks wouldn't have it. So that's allowed. But then we see the other side of the coin here with what happens to these exchanges. And all these customers lost their money, not FDIC insured. So we look at a lot of these vloggers out there telling people to take your money out of the bank. Well, do you want to take your money out of a too big to fail financial institution? Do you trust FDIC to be there if something happens to the financial institution? Well, it depends on your perspective. Some people feel safer in a too big to fail financial institution because why? It's too big to fail. They're not going to let it collapse like FTX. All right, let's jump over here to some other news. Speaking of big financial institutions, Goldman Sachs will lay off staff in a matter of weeks. So more holiday layoff announcements, holiday New Year's, going into the new year. A lot of people are going to be losing their jobs, and this is just going to continue. It's going to snowball. It's going to escalate. Yet they're going to tell you that there's no recession. And what are they going to do? They're going to point again to the spending, what we talked about at the beginning of this video. Look how much people are spending. That goes into GDP. Here's the number. It's positive, and therefore there's no recession. In the meantime, people are going broke and going into, or at least headed towards insolvency. And that's another thing too. A lot of people out there believe that prices will come down. They believe in 2023 that inflation's going to come down. Well, they don't understand what that means. Inflation coming down does not mean a lower cost of living. It just means prices are going to go up at a slower rate than they went up previously. So the equivalent of that would be, okay, you went to the casino, you lost $500 gambling, but the following week you went to the casino and you only lost $450 gambling. You still lost money, but because of that that loss was lower than the previous week, you could look at that as a positive thing if you're looking at things the way that's being presented here to most of the public. Now, we were just talking about bubbles earlier. Here is a visual to show you the magnitude of the housing bubble. This is the disconnect between home prices and income. So while we did see incomes go up, there was a lot of pressure for businesses to pay more to their employees because of the rising cost of living, including housing. So naturally, you did see an increase in wages, but look at the disconnect between home prices and wages. Now, if you go to the financial crisis here, the bursting of that housing bubble, we see that home prices actually dropped and fell below wages, what wages were, the wage trend, and that was an overcorrection. So now with a much steeper rise in home prices, we're likely to see an even bigger divergence or bigger drop below wages in this upcoming financial chaos that we're going to see unfold in 2023. But I've said here that I don't think we're going to see the bottom for several years. I'm thinking 2025, 2026, before we see the bottom of this next financial meltdown. As you see in the last one, it took about, 3 to 4 years to bottom out. So if this one's much worse, maybe we won't see the bottom till 2027, 2028. And that's the thing about it. You don't know, because you don't know the type of manipulation and you don't know the type of, what's the word I'm looking for, shenanigans that are going to come about as a result of the invisible hand of the market. Now, when it comes to rising prices, inflation, and getting less for your money, we also have to talk about shrinkflation, where the packages are smaller, the contents of the packages are smaller, but yet the price is still the same or even higher. Someone sent this to me, and this is supposedly a freshly opened can of Pringles. Now, I think this is even worse. I think they must have taken some off the top, because that looks about half full to me. And I haven't eaten Pringles in years, but I remember when I did eat them, I would notice that the Pringles were stacked, kind of lower, well below the top of the package. So I guess if we believe what this person that did this photo is telling us, is that this is a freshly opened can of Pringles, and we see there's not many Pringles in the can. And I'm not advocating eating Pringles. I think there's a lot healthier food choices out there you can make, but this can has a soccer ball on it, so that must mean it's healthy, right? So you'll be able to play soccer better if you'll eat the Pringles. Now, also, someone sent me this meme here. This is the Fed trying to describe inflation, and you see the sun setting back there. It's just tiny. It's just tiny. Put your finger up there. It's just tiny inflation, no problem. And remember, if they admitted how bad inflation was, they would have to give out larger Social Security payouts. So it's not just here in the U.S. All across the globe, we see nations understating the actual cost of living, rising cost of living, and increases in inflation. Now let's wrap this up here. Let's take a look at another very heavily beaten down stock. We're looking at Netflix. We know that Netflix did have some problems during the year, and we do see it rose actually from the bottom. But first, let's go back to late 2021. We were up to about almost $700 on this Netflix stock. We saw then it dropped down to roughly a low of about 175. We're now at about 290. So was this a good dip buy? Please let me know what you think down in comments. Or are we going to see more downside in Netflix because of the state of the U.S. consumer? And will more people be pulling back on this type of entertainment spending or non-essential spending? Please let me know. Are you buying any dips, including Netflix? Not Netflix, what are you buying? Is it the dip, or is 2023 going to be a continuation of the bloodbath in the markets? Please let me know down in comments. Hope everyone is having a great end to the week here and a happy weekend coming up. Happy New Year, actually. Hopefully I'll be back before the end of the year, but I'll say it just in case something comes up where I can't get a video put out. So thanks everybody for being here. It's been a great 2022 having you here on this channel. Appreciate every one of you. Please give thumbs up and subscribe if you'd like to support my work and allow me to continue to bring you this analysis and these charts and all this data and news. Thanks everybody again. Bye for now. Big love and peace.